Welcome everyone and thank you for joining us today to today's Rocksolid Estates webinar. Today we are talking about a topic that is currently transforming the real estate market in a major way. Many investors are familiar with traditional real estate investments or perhaps REITs, real estate investment trusts. And at the same time, terms such as tokenization, blockchain, and digital real estate investments are becoming increasingly common. The big question is, what is truly the better long-term solution for investors? Yeah, especially now in times like these. And what's the perfect long-term solution? That is exactly what we will explore today. First, we will understand why real estate has been one of the strongest asset classes for decades, how REITs emerged, where their limitations are, and why a new generation of real estate investments is currently evolving. And of course, at the end, we will show you how you are implementing this model by using Rocksolid. So let's start with the most important part. Why is real estate been building wealth for decades? So when we talk about long-term wealth building, real estate almost always becomes part of the conversation. And there is a simple reason for that. Real estate combines two things at the same time: ongoing income and long-term value appreciation. On one side, there is rental income and cash flow, and on the other side, property values have historically trended to increase steadily over long periods of time. And this creates a compounding effect. Property can generate income month after month while also increasing in value. Exactly this combination makes real estate so attractive. And in addition, real estate is often perceived as a relatively stable asset class. Of course, you have to take a look at the market trends and see what you buy, but in the end, people needed housing, companies needed commercial space, and tourism requires accommodation. That is why real estate has been considered one of the key foundations of long-term wealth creation for decades. However, there was always been a major problem. The access was not easy, so you don't invest with 100 euro or 1000 euro into real estate if you want to buy your own property. And that's also why REITs went pretty good up, and that's why exactly REITs were created. REIT stands for Real Estate Investment Trust. Simply explained, REITs are publicly traded real estate companies that allow investors to invest directly and indirectly into real estate. Instead of purchasing a property yourself, you buy shares in the company that owns and manages properties. The advantage was revolutionary. Of course, suddenly small investors could gain relatively easy access to a real estate market without having to buy or manage properties themselves, especially if you don't know how to do it, which real estate you should buy, and where you can optimize it. And especially in the US, REITs have been extremely popular for decades and have grown into a massive market. And many investors still use them today for dividends and recurring income. And this is exactly why REITs were such an important step in the evolution of real estate investments. And why REITs were created. To understand why REITs became so successful, we need to take a look again at the traditional real estate market. So direct property ownership comes with many challenges. In most cases, a large amount of capital is required, often several hundred thousands of euros. In addition, there's financial costs, transaction fees, administration, maintenance, and many operational responsibilities. And even more important, the entire investment is usually tied to a single property. For example, if you invest 30,000 or 50,000 or even 300,000 into one property, I become fully dependent on that single asset. Its location, the market, occupancy rates, and the development of the surrounding areas. This means the high concentration risk, and that's one of the biggest problems here. REITs partially solved exactly this problem. They made real estate investments easier, more liquid, and more accessible. But REITs also created new challenges. So, where traditional REITs reach their limits. And this is exactly where it becomes interesting. So, while REITs simplify access, they also introduce new disadvantages for the investors. Today, many REITs are heavily dependent on the stock market. So a real estate is this means that even the underlying property performs well, but share prices can still fluctuate significantly due to general market movements. In addition, investors often have limited transparency regarding which specific properties are held in the background or how decisions are made. Another important point is that the lack of investor participation. In most cases, investors simply buy into a large fund or public company without having any meaningful influence over the structure or the projects themselves. And this is exactly where the next evolution of the market begins. The evolution of real estate investments into fundamentally changed, not in the most important part, because in the end you buy property, you of course need to make a contract, buy it with money, but you can think different in the form of a transaction between the shares of your real estate shares. The real estate market itself is not very changing in this direction, but what is changing is the access. So through the blockchain technology and digital participation models, completely new possibilities are emerging to structure real estate investments in a more flexible and efficient way. So tokenization simply means digitally representing economic ownership rights in real-world assets. And this creates models that are faster, more international, and significantly more flexible than many traditional structures. And that is exactly why more and more people are now talking about tokenized real estate or tokenized real estate investments. One important thing to understand is the property itself remains real. So tokenization does not mean that the property becomes digital or that the land registry is replaced. The property continues to physically exist and remains protected within traditional legal systems. What changes is simply the form of participation. Investors acquire digital participation rights within a legal structure, for example, through participation rights or similar models. The blockchain primarily serves as infrastructure for transparency, documentation, and efficient processing. The major advantage is that investments can become more flexible, more accessible, and available internationally with smaller investment amounts. And that is exactly why this market is currently growing so rapidly. Why tokenization is becoming attractive. So tokenization solves several problems at the same time. First, entry barriers are significantly reduced. Investors no longer need to invest several hundred thousands of euros to gain access to real estate. Second, diversification improves. Capital can be distributed across multiple projects instead of being tied to a single property. And third, international and digital access models are created that traditional real estate structures often cannot provide. And this is why many experts do not see tokenization as a short-term trend, but rather as a long-term evolution of real estate markets. This could be seen in different ways. And this is exactly where Rocksolid Estate comes in. I would now like to show you how we implement this model in practice. The Rocksolid Estate AG is an Austrian stock company with a capital market prospectus that gives you access to this market. And how does this work? The core principle behind Rocksolid is relatively simple. Investors participate through the Rock token, through structured real estate platform. The major difference compared to many other models is that investors are not only exposed to a single project, but to the broader Rocksolid ecosystem. The this automatically creates a more diversified structure. So Rocksolid combines real estate projects with digital participation models and transparent blockchain infrastructure. And the goal is clear, of course, to make real estate investments more accessible, transparent, and scalable. And to jump on to the next slide, you see how it works. So from investment, where you buy the ROC token via a MiFID II licensed broker called Jonathan Mars, and then can buy the ROC token starting from €100. And then Rocksolid acquires and optimizes real estate that generates income from day one. So also very important, Rocksolid buys only real estate that is finally developed and generates revenue from day one. And that's also why we can pay out on a monthly basis. So you receive a payout in EURC, a euro-backed token, directly to your wallet, which you can exchange to euro and to your bank account. And of course, the value development of the ROC token and the property. So benefit from long-term asset development over time is also one of the most important parts in combination with the monthly payouts. So take a deeper look on the monthly payouts. A central part of our model is the distribution system. Income generated from the properties is distributed directly to investors on a recurring basis. And these payouts are made in EURC, a digital euro currency, and are processed through the Avalanche blockchain. The advantages are speed, transparency, and efficiency. Investors receive payouts directly into their wallets and can decide whether to reinvest or withdraw them. And what's important? You invest into the ROC token and diversify between multiple asset classes. Our focus is the commercial real estate, so it could be office real estate investment, hospitality, industrial, or even photovoltaic. So that's also one important part. I will tell you a little bit later about that. But now combine the two things directly. When comparing traditional REITs with our model, the differences become very clear. So REITs are typically tied to traditional stock markets, structured and often move similarly to equity markets. Rocksolid, on the other hand, focuses on real estate structured combined with digital participation. In addition, we focus on diversification across multiple asset classes, combine digital infrastructure with real-world assets, and integrate investor voting rights into the structure. The goal is not to replace REITs, but to create a next evolution of the real estate market. And let's take a deeper look on how it works from property to the cash flow to payout. To make the concept more tangible, let us look at a simple example. So imagine a hospitality property with a value of €1 million. This property generates approximately €10,000 in monthly revenue through rental operations. After deducting operational costs, reserves, management, and other ongoing expenses, approximately 50% remains as operational profit. Of course, you have to pay, let's say, Booking.com for the rental, but also you have to pay the government that you rent out and so on. So in the end, it's around, let's say, 50%. So this means around €5,000 in monthly net profit. And this is exactly these kinds of cash flows that investors participate within the structure. And the scaling effect, of course, if you diversify over different properties and grow up to 10 properties or 50 properties, then you have a monthly income that's on the one hand side distributed, but also could be reinvested to optimize the real estate to improve the internal value of the property or the properties. The market opportunities in Europe is enormous. So the European real estate market is one of the largest market in the world. At the same time, tokenization is still in its very early stages in many areas. More and more institutional investors are already exploring tokenization and tokenized real-world assets. Industry analysis suggests that this market could grow significantly over the coming years. And this is exactly why we believe that access to real estate investments will fundamentally change over the next decade. And if you take a look at the investor benefits, as I mentioned before, at Rocksolid we only buy fully developed real estate. We have voting rights for our investors, and immediate returns and long-term growth, and of course the value development of the token. And you co-decide, not just invest. So you decide with your capital, it's your choice, and you make an impact, because we make fact sheets, investment measurements, and then ask our investors about property acquisitions and buying and sales of real estate, and also strategic and operational decisions are very important. So our future focused investment could go more into the energy and efficiency upgrades if you decide on it, or if you say I want to do a payout, for instance, in a higher way and not reinvest all the money, that's fine. You are the voters and you decide on what we are going to do. And also the energy initiative. So let's say we are focusing a little bit more in the sector of renewable energy that generates additional income streams beyond the rental revenue, and it's strengthening the investor returns and the stability. And of course, forward thinking and a sustainable approach is, in such times like these, important. And our team has many years of experience in the real estate and fintech market, and also AI is a very important part, especially when you optimize real estate and generate profit out of hospitality, properties, and so on. And when you have something like, let's say in hospitality, something like dynamic pricing, you can increase the value and the income of your real estate by many factors. Yeah, and to summarize, real estate has always been a powerful way to build wealth. What is changing now is that the property itself is access. And REITs were an important step into the evolution of real estate investing. Tokenized real estate continues these involving combining real-world assets with digital infrastructure. And this is exactly where Rocksolid positions itself. Thank you very much for joining today. Scan the QR code now, get redirected then to Rocksolid, sign up, and then buy your first Rock token via Jonathan Mars. Thank you and see you next time.